Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about GBP USD and give you my trading strategy for it because we do have quite interesting price action and structure. Now, as usual, first I will be covering the technical side, then we will go and see what we have when it comes to the order flow. So how institutions and the biggest speculators in the market are moving their positions. Now, starting here from the monthly time frame, what we can see is that at the moment we are testing a very strong historical structure resistance area for this market. In fact, this zone was acting as previous support here, against support here, against support here, against support here when the market created this green candle here. However, at the moment we have broken below this zone and all this previous support is now turned resistance here. And what we are getting at the moment is a retest of this previous support and resistance. And what we could expect is for the market to reject this area to the downside. So from a monthly perspective, we're currently testing historical previous support turn resistance, and we expect bearish price action to develop. Dropping down on the weekly time frame, what do we have? Now, from a weekly perspective, if we look left, we can see how we have just reached the previous supply zone. From here, all this move to the downside started, creating a strong supply area, and at the moment we're testing exactly this area. So what we could expect is a potential rejection to the downside. Now, here we can also notice how from this low to this high, the market created a strong impulse. And in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a 0.32 Fibonacci retracement lining up exactly at this area, which would be the first downside target that the market is supposed to correct to. Now, going down on the daily time frame, what do we have? Now, from a daily perspective, first of all, I did speak about GBP USD a few days ago. When the market was here, I made a full breakdown explaining all the reasons for which I expected a correction to this zone, and then from here to see a rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in the description this previous analysis, so you can go and check it out for more free education. However, at the moment, we must notice how we have created new structure here on the daily. In fact, when the market created this move to the upside, breaking above the previous high, this previous high became previous daily resistance, which is now turned support. So if the market is to reach our downside target at this area, what we first need is a break below this area. Now, if the market manages to break below this previous resistance turned support, at that point, this area would once again be turned resistance. And essentially, this would be the creation of a head and shoulders, because if you have a structure level, the market melts below it and breaks it. At that point, you expect a retest and continuation lower, creating a left shoulder, head, and right shoulder here. Now, if we go and see what we have when it comes to the commitment of traders and we check the data specifically for the pound, and keep in mind that if you're checking the data for the GBP, you are actually checking GBP USD because all currencies on the spot are traded against the USD. So if you're checking the data for the GBP, you are already checking GBP USD. And if we check the data here, we can see how with the last reports, overall net positions have slightly started remaining the same, but slightly getting decreased. We went from minus 35k to minus 36k, so not big change, but anyway, it's important to point out that it's already 3 reports in a row that we see thousands of longs getting closed. We see 4.9k longs closed from an institutional perspective, indicating that there is profit taking happening around this area from an institutional perspective. So institutions are taking profits on their longs since the market has already created a move to the upside. And if they will also start adding shorts, there is a good probability at that point for a rejection lower. So we don't know if the market will create the break, but if we do get a break below this support, at that point on the retest of this previous support and resistance, this is a very interesting area inside of which institutions could be adding more shorts. It is a very interesting area inside of which we could be looking for a potential move to the downside. So if we do get this retest of this area after the break, how we could be approaching this potential shorting opportunity. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection lower for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower past the testimonials, you will see that at the moment I'm running a special promotion in which you can get access to the mentorship program with a huge upfront discount. So one-time payment for lifetime access. And since I have partnered with the forex broker Blueberry Markets, if you open an account with them from the student dashboard, you can also get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the timer goes to 0 and the offer ends. However, spots are limited, so if they get filled before the timer goes to 0, the offer will end anyway and the price will go back to normal. So I really suggest that you take advantage and join directly from here to gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I'll see you in my next video.